quantum computing.
Quantum is going to break crypto.
Clearly, there's national security at stake here.
Is he going to destroy Bitcoin?
Quantum computers, one of the things that they do well is factoring large numbers. Somebody with your public key can actually take your Bitcoin, but nobody will know about it. That's the risk. When we lever trillions of dollars into our economy with Bitcoin as the underlying, Bitcoin becomes a military target for the CCP or potentially its proxies like North Korea, wherein you can do tremendous economic damage to an adversary by taking Satoshi's coins and moving them around, triggering cascading waves of margin calls and liquidations and sending the price of everything trending towards zero.
So what do you think the future looks like?
I think having a strong quantum roadmap towards post-quantum resistance or post-quantum cryptography will be the most bullish indicator of price, because when that time comes, that's where the liquidity is going to go. And if none of them are ready, all the liquidity is just going to go into post-quantum bank accounts.
I want to get back to your early days with Bitcoin and Ethereum. Tell me how John Lilic decides to go to New York City.
I met a guy named Nick Spanos. He started the Bitcoin Center. He would have us go outside, stand right in front of the stock exchange on the street trading Bitcoin. In 2014, right? From there, I learned about Ethereum and I started basically volunteering at ConsenSys. You could see that like New York was one of the hubs. It became very clear that I had to get deep into Bitcoin.
You know, a lot of people look at you and they're like, I want to grow up and be John Lilic one day. How does that make you feel, and what do you advise to the younger guys and girls getting into this space?
When you find an asymmetric opportunity that you're very passionate about, it's going to require a tremendous amount of work, sustained risk, and application of like whatever aptitude you have towards helping develop that opportunity is the key there. There's just a wealth of opportunities out there, it's unbelievable.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
This is London Real. I am Brian Rose. My guest today is John Lilic, the Ethereum pioneer, blockchain strategist, and quantum security advocate. You were a core member at ConsenSys, the software company behind MetaMask, which scaled Ethereum to global adoption. You later served as a strategic advisor during the early development of Polygon, and today focus on preparing Web3 systems for the disruptive impact of quantum computing. You've warned that much of our current cryptographic infrastructure, including Bitcoin and DeFi protocols, is not equipped to survive Q-Day, the moment when quantum computers can break classical encryption. Today, through your work with Telos and other forward-leaning projects, you're helping to develop zero-knowledge cryptography, decentralized governance, and post-quantum frameworks to secure the future of digital assets and AI. John, welcome to London Real.
Oh, well, thank you for having me. That's very kind. I think more than anything, I'm just a lucky guy who stumbled into Bitcoin and kind of like had a bit of an interesting journey over the last 10, 12 years. But it's very nice to be here. I have to say, just real quick, well, we've known each other for a little while. I'm a big fan of everything you've done over the years. A lot of my friends are very excited that I have the opportunity to be here with you as well. And I just want to, before we get started, I want to commend you, because here's the thing. At the margin, in the moment, that's when it counts, and that's when it's really hard to do what's right, because the consequences are very high, right? That's when it's very costly. And so these days, there's lots and lots of folks, media people and so on, that are kind of backtracking a bit. And it's a little bit of a reversal and, obfuscating the truth and what actually happened. But, I admire what you did, obviously with all this COVID stuff going back a few years. And it's a great honor to talk to you.
Thanks for that, John. I appreciate it. When all that was happening in 2020, Alex Jones had me on his show remotely, of course, because nobody could travel. And he was like, Brian, why did you fight back? Why did you find the strength to say, no, I'm going to keep broadcasting? And I was just like, it wasn't a conscious decision. That day when YouTube banned and deplatformed that video, I was so angry that my only reaction, John, was to re-upload the video. And then when they re-upload the video. And then when they took that down, to upload a vlog about how they had just taken down the video. It just was so fundamentally wrong. And I don't know if it's because I grew up in America or just because I'm a human, that someone could stop free speech. That, I don't know, what we did was just a reaction. And then in a weird way, I felt like I had been trained my whole life for that. And also that we were just privileged to be in a position where we could serve with that message. Here we were in London with a studio, with people that could function during lockdown, with the broadcasting platforms and the audience, and then David Icke was 2 hours away. And so we were in a great position where we could hold these live conversations that really changed a lot of people's lives at a point where there was no other media offering any other alternative viewpoint except the one that they were portraying. Yeah. So, it was just a real honor to be able to be of service at that point.
Yeah, I think, going back to that time, I've talked about this off camera a bit, it's kind of like, it's fine to have differing viewpoints. There's compelling data from both sides on, for example, vaccines and masks and things like that. Okay, and I'm not going to give, an opinion either way. I'm just going to stick to the fact that the right to informed consent is enshrined in every single human rights document that every single Western democracy subscribes to. It's a core tenet, right? It's one of the things we learned from what the Nazis did in World War II, to never infringe on that right. And the right to bodily autonomy. So you should have the right, and Novak Djokovic is a guy that I admire very much, and this is the point that he made as well, the way he was treated, obviously, in a lot of countries and so on. But he wasn't anti-vaccine, he was pro-choice, pro-informed consent. Yeah. And I think that's the big message, that kind of you were advocating for as well. And that is why today, I think, you are an icon. A lot of people admire you. And I think those moments going back when it's like hard and the truth matters, that's what stands the test of time. And I think that's where things got a little bit, it was kind of a tough time, but here we are now, so it's all good.
Yeah, no, I agree. We had the right to have those discussions. And the other thing which boggled my mind is that not only do you have the right to speak, you have the right to hear someone else speak.
Correct.
And here I was with 2.4 million subscribers in the world, and I wanted to talk to them and they wanted to listen to me. And it's someone in the middle, in this case, YouTube, Facebook, Instagram, later PayPal, LinkedIn, said, no, you can't talk to each other. And it was like, well, there's something fundamentally wrong with that. And they always say that, the solution to bad information is more information.
Correct.
Or if you disagree, well, let's have more of a discussion about it. And so we just knew there was something wrong. And we were at the tip of the sphere. We were in March and April of 2020 when no one was really doing that. Now, a lot of people came later and they helped continue fight, which was great. But yeah, it was an interesting time. And when you're getting shut down by platforms, like 6 platforms in one day, and everyone says, and you're like, this can't be coordinated. No, you're just being a conspiracy theorist. Of course it can't be coordinated. And I didn't actually believe that. And then later when you look at the Twitter files, you're like, oh, it's all coming from DC. And then the whole thing. But at the time we were just fighting, man, getting up every day and
Brian
fighting.
Rose, a legend. Outstanding.
So look, I want to get back to your early days with Bitcoin and Ethereum, back into New York City, and hear about that whole journey, because that's incredible, especially compared to where we are today with Bitcoin and Ethereum, these two massive chains doing massive things. But I'd love to start with quantum computing. And so maybe we jump in and talk about what is Q-Day. It's a term I never heard before. And how close are we to it, and why do people need to know what it is? Because I think your average person has heard of quantum computers. They've heard of some doomerism around it, but they don't know how it's going to affect them. Even people in crypto probably don't know how it's going to affect them.
Yeah, well, that's a very good point you make around doomerism, and I've given a couple talks and presentations. Quantum hopefulness is how I like to call it. And so there are risks, and we have to understand those risks, but then there's tremendous opportunity as well. And so for me, this started last summer roughly, and I basically was very fortunate to meet some interesting people, including a couple guys from Oxford, Stefano Goglioso and Fabrizio Genovese. They are both PhDs, and it's a very interesting Venn diagram with these folks and similar folks. We were kind of talking about this earlier, but you've got the quantum physicists, computer engineers, and they're crypto native, so they understand the blockchain ecosystem. And I started talking to these guys, and actually Stefano's a fellow at Oxford, so that's like Roger Penrose level. I mean, he's a brilliant mind, and Fabrizio as well. And they've been in the quantum computing space for more than a decade. And in my mind, it was like 40 years from now, the CIA or the US military is going to build this gigantic machine that looks like it's something out of Star Trek. And it's going to change the world, and we'll have new material science and new chemistry and so on. And it's going to be one of the components that takes us to a type 1, civilization and so on. But I've got plenty of time, and it'll be a great thing, and I don't really need to worry about it. And so that's just how things were in the back of my mind until I started meeting these people. And that's when I realized, in fact, I've got pretty much all of my wealth and most of my entire professional life anchored on the blockchain in one way, shape, or form. And as it turns out, quantum computers may not, and I want to be very clear, they're not necessarily a silver magic bullet to just do all sorts of incredible things, certainly not in the near term. But one of the things that they do well is factoring large numbers, right? And so you look at not the consensus, because that's hashing based, but the accounts, the public-private key pair infrastructure part of it. So if I know your public key, it's going to take me an extremely long time with a classical computer, billions of years, to try and calculate your private key. And when you look at a classical computer, it's sort of ones and zeros, and it goes in a sequential way. And because you have so many combinations of possible scenarios, it's just going to take a very long time to go through it all. And that's fundamentally the reason why you can go to sleep at night, and by the grace of God, if you wake up tomorrow, two things will be true, right? Like the sun will be shining, and your Bitcoin is still going to be there, provided you have securely stored your private keys in a safe in a vault, or really a brain wallet is the best way to secure them. But what happens when technology gets us to the point where somebody with your public key can actually determine what your private key is? And that's the risk. So I just want to be very clear. There's a lot of confusion sometimes. Hashing is very different. I think the consensus, it's much stronger. It's not really the thing that's under threat in the near term, or possibly for a very, very long time. And so then you kind of start to look at these various blockchains, and this is one of the things we were talking about off camera as well. My view is everything is intertwined. Okay, I started with Bitcoin, and then I moved to Ethereum, and I have investments in Solana and other ecosystems. I'm not a maximalist in that sense. I love Bitcoin, but it's kind of like these tokens are everywhere now. And so the reason things are highly intertwined is because most Bitcoin trading today happens against stablecoin pairs, like USDT, for example. I think it's right around 80%. And so when you see a lot of the criticisms from hardcore Bitcoin maximalists about other networks, and I don't know if I'm allowed to swear or not,
Go
but
ahead.
they call them shitcoins, right? And there might be merit to that claim very often when we see these scandalous, pump and dump schemes and so on. But at the same time, Bitcoin relies on stable coins in order for it to have price discovery and volume and liquidity. And the thing that makes Bitcoin king is the liquidity, right? So it is intertwined. And so the problem is multivariable. It's multifaceted and multi-tiered. It's not just Bitcoin. Of course, it's very important that we start with Bitcoin and we take steps to secure Bitcoin. And there's people who are very active. There's a guy named Hunter Beast. He put together the BIP 360. Great guy. I've talked to him a few times. You see innovation with, Mara, for example. I think they launched something called Enduro. Isabel Foxen, I believe her last name is. She's leading that effort, and there's lots of great dialogue and robust discussions. You see a guy like Alex Pruden and P11, and they've released some stuff in terms of trying to, take early steps to protect Bitcoin and so on. So it's already starting to happen. But then you also have to think about other networks too. And so when you go to the smart contract platforms, the problem is much worse. And this is something that I think also has to factor into it. So with Bitcoin, some of the old address types, like Satoshi's coins, I think it accounts for roughly 20% of all Bitcoin. The public keys are exposed, okay? And so a sufficiently large quantum computer, and whoever has that capabilities, and by the way, my view is, and I wrote an open letter to JD Vance, I mean, I'm sure he's probably never gonna see it, but he was at the Bitcoin conference recently in Vegas, and he said it's a big strategic advantage that the United States is moving into Bitcoin and China is not. And so, I'm Canadian, but I grew up in the States. My father was an American, he became an American. My brother, my kids, I love America. I just never became a citizen. I want to see America do very well, but we have to also realize that when we lever trillions of dollars into our economy with Bitcoin as the underlying, Bitcoin becomes, in my opinion, a military target for the CCP, or potentially its proxies like North Korea, wherein you can do tremendous economic damage to an adversary by, taking Satoshi's coins and moving them around. It's less about cashing in those Bitcoin and more about causing chaos and panic and sending the price of everything, maybe not to zero, but trending towards zero, triggering cascading waves of margin calls and liquidations and massive economic damage into the US economy as a result, especially if you consider the trend we're on, which is generally, I think, a good trend. It's good that we consider Bitcoin as hard money or an anchor for our financial system, but we have to understand this risk, okay? And so, I wrote an open letter to JD Vance, and I think that, and by the way, you look at a lot of these quantum companies, and I think a good analog is AI. So China caught up very quickly. I mean, DeepSeek came out of nowhere. Another analog I'd like to look at is, for example, reusable rockets, like hard technologies. And so they're now landing reusable rockets. They just landed a reusable rocket in the sea like a couple weeks ago, went under the radar. So their ability to scale up, and other adversaries as well, should not be neglected. And so if we don't take any action, Bitcoin sits there as, potentially a multi-trillion-dollar opportunity. Aside from that, a lot of these folks who have lost Bitcoin or other crypto, there's a poor guy here in the UK, he threw his hard drive away. I mean, it's a very famous story. Yeah.
Yeah. He's still trying to find it.
Yeah, in the dump. He's trying to sue the dump and everything. His wife divorced him. He's had a tough time. People like that could go to a lot of these advanced R&D companies, like a PsiQuantum, an IonQ, or Rigetti. You can pick. I mean, I'm not opinionated about which companies, which startups are going to get there and what their roadmaps are like, but you could go there and sign a perfectly legal contract, and you can say, I have a claim to this Bitcoin, it's mine. If you recover it for me, I'll give you a hefty finder's fee. And so even perfectly legal avenues where recovery of lost private keys, for a lot of these companies, this could be tens of billions or more in potential revenue. And in that scenario, everybody is highly incentivized to be very quiet about it. So one of the other complex parts about all of this is, there's no bat signal or obvious warning or indication that a quantum attack is underway. In fact, what you're going to see is, and I'm not saying what we've seen recently as an example of quantum attacks, but you're going to see threads on Twitter, on X, oh, this Giga Chad held for 15 years and just, moved his Bitcoin or her Bitcoin, and now they're selling it for, billions of dollars in profit. You're going to see people celebrating that somebody was able to hold that long, okay? So even like trying to understand what is actually going on will be very hard. So that's kind of a little bit of the landscape with Bitcoin. Now with the other networks, because they're smart contract platforms, and so just going back to Bitcoin, most Bitcoin addresses are not public, right? But a significant chunk of them are. Right. And so Jameson Lopp proposed, for example, I'm not saying he proposed it, I'm saying he outlined options, and one of them was effectively confiscating those coins. So the Bitcoin community agreeing to take Satoshi's coins. That I think would break the social contract in many ways and would be very hard. So in other words, for every solution, when you dig into this stuff, it unfurls many other hard trade-offs that are like not palatable and very difficult, okay? So for that chunk of Bitcoin, it's a hard problem, and that's currently being discussed as far as what to do. But even if you can migrate all of Bitcoin, I mean, there's a few papers out there, and it's sort of like if you imagine 100% of the block space available for post-quantum migration. So you send your Bitcoin to some post-quantum, secure wallet or address or whatever. It would take, I believe, 77 or 78 days to migrate everything, assuming 100% of the block space was used for this purpose. If 10% of the block space was used in an orderly fashion, it would take like 3 years.
Wow.
Right. So, and in reality, if quantum chaos comes, like the scenario I described with the CCP, or I think maybe even through their proxy, I could see them assigning this task to the Lazarus Group, for example.
In North Korea, right?
Very, very famous for hacking.
Yeah, they even have their own name.
Correct.
Which is fascinating. We think they were behind the Bybit hack and.
Yeah. Oh, yeah. Very sophisticated actors. This is all they do. It's a military operation. And the quantum chaos comes because it's become clear that they've actually been responsible for this attack. Then you'll see people panicking, trying to move their Bitcoin. So the mempool will be super full. The transaction fees will be very high. Imagine having $10,000 of Bitcoin, but the transaction fee is $30,000, right? You'd be stuck. And we start to get chaos. Okay, so we have to take it seriously. Even if you're opinionated and you think that quantum computing is a scam and it'll never happen or it won't happen for another 40 years and we don't need to worry about it, there's still good reasons for Bitcoin to be ready. In my opinion, quantum readiness in the context of Bitcoin very soon will become one of the most bullish impact or indicators of price. The price will reflect, let's say, strong
readiness.
Action correct.
Okay, got it.
Okay.
And just to reiterate what you said, the quantums can't affect the hash rate, which means the mining itself or the verification of new blocks. That's not an immediate threat with quantum, but it is with any public key exposed. And that's, for anyone listening, was a reason not to get your public key out there, because you can leave this trace behind that can be exploited later.
Correct. You don't want your public key known.
Right.
But the thing is, you look at tremendous innovation in the Bitcoin space, like the Lightning Network, for example, and Jack, Bitcoin Twitter founder Jack, I got a lot of respect for that guy. But Square just integrated Lightning with like 4.5.
Investment Club. Today, I consider it the best investment that I've ever made. We get 4 projects presented a week by their associated CEOs. Personally, I'm completely blown away by the quality of these projects, and I know of nowhere else where I would be given this same opportunity. Each week that passes, I feel more appreciative of the fact that I'm a member of this group. The vibe was just tremendous. Everybody's on the same wavelength. We just clicked. Everybody listened to each other, enjoyed their company. It was just magical. Take action. Don't take my word for it. Due diligence you need to do. And I really hope that someday down the road I see you in the club. It far exceeded expectations, without question.
$500,000 vendors, right? So the Lightning Network exposes public keys.
Okay.
So as that grows, we have another issue. and so on, right? So yeah, it's very important that people understand that it's your public key, and deriving the private key from your public key is the risk.
Okay.
Now, we go to the smart contract platforms like Ethereum and Solana and so on. All the public keys are known by default. That's how the system works, right? You can see everybody's public key. You can see the amount of ETH and other whatever stable coins or other tokens. So that problem is even harder. And then you have DeFi, and you have this smart contract capability and composability and so on. So it becomes very complicated. Now, I also wrote an article that basically talks about stablecoins as the first, let's say, exodus, in my opinion, wherein what we see today is very quickly we're heading towards $1 trillion of stablecoins on chain. One of the use cases, I think probably the preeminent use case of Ethereum and a lot of the smart contract platforms, frankly, is that they have propagated dollar hegemony globally. I actually think it's really good for the world if the US dollar is kind of the main currency. And so when you're in a developing country and, you know, in that country it might be difficult to get a US dollar bank account, you can just download a wallet, MetaMask, Phantom, whatever wallet you want, and suddenly you have a US dollar bank account because you can accept stable coins. And I think this is a fundamental good for the world. That's just my opinion. And so as we head towards $1 trillion of stable coins, and again, we know that stable coins are the main trading pair against Bitcoin. It's actually very little USD. Well, think about who is deploying stable coins on chain. At this point, it's quite institutional. So you've got smart capital, smart money allocators who do things like, you know, you see something like Morpho, for example, which is a lending protocol on Ethereum where you can create your own vault and curate risk and offer up that basically basket of lending services to the market. And so, you know, you can generate yield. Aave is another example. You can put your stable coins in Aave and earn interest, okay? So these smart capital allocators are the ones who do things like, you know, send $100 million to Tether or Circle and through a bank wire, and then they take the stable coins and deploy them on chain to earn yield in a variety of different strategies. Okay, so smart capital allocators are currently earning, in most cases, if they're doing a good job, more yield than they would just holding treasuries in a bank account. And that's the reason why they use DeFi. And that's one of the reasons why this institutional growth that we're seeing now, particularly on Ethereum and starting on Solana as well, is so robust. However, if you're a smart capital allocator, and I don't know, fast forward a few years, and I tell people you should look at all the roadmaps, not just one quantum company. So IonQ recently put out their roadmap, and they're talking about 2,500 logical qubits by 2028. That's enough, okay, to create a scenario where this risk of factoring private keys from public keys becomes feasible. Look at DARPA, look at Google, look at IBM, look at all of them and overlay them. And it seems to converge around 2030 based on the roadmaps. One of the things that's accelerating the roadmaps is, you know, AI is driving tremendous algorithmic improvement. Okay, without good algorithms, it doesn't mean the quantum computers don't mean anything because qubits are inherently noisy. So you need good algorithms to cut through the noise. And so AI driving algorithmic improvements is sort of one of the vectors that's materially improved and actually, in my opinion, accelerated some of the roadmaps. Okay, so now you're a smart money allocator. You're, you know, you've got hundreds of millions of dollars on chain. You're earning an extra 3% or 4% above what you would with the Fed. And you're looking at this stuff and you're like, wait a minute, Larry Page or Jensen Huang, and by the way, Jensen just did a conference and he had all the quantum computing startup CEOs on stage with him. After the conference, or maybe right before, I can't remember, he was quite bearish and all the quantum stocks dumped. A couple weeks later, he changes his mind. And in fact, right now, PsiQuantum, which is one of the leading photonic wafer platforms, is doing a round. They're raising, I think, 700, 800 million at something like a 6 billion valuation. And NVIDIA has already publicly committed to taking half the round. So you see these tech luminaries, right? And they start talking about quantum, and you're a smart money allocator, you know, in the blockchain DeFi space. And you're like, wait a minute, this risk now is unknown to me. I don't know when Q day is going to come. And I've got a tremendous amount of money fully on chain, so I'm exposed completely. Is it really worth? And in fact, especially if these guys, are public companies where they have fiduciary responsibilities, can we even take this risk?
Yeah.
Versus when you look at the Bank of International Settlements, when you look at a lot of the big banks, they're well on their way to basically, and by the way, a lot of internet browsers now are post-quantum and so on. I mean, other institutions where, they don't have to deal with decentralized governance and consensus are already taking proactive measures. So I think by that time, maybe in a few years, if you're a smart capital allocator, you're going to say, for an extra 3% on chain, potentially at the risk of 100% total loss, I think I'm going to take my stablecoins off chain and just keep them in my quantum safe bank account at JP Morgan and ride this out until I have clarity on what's going on. Okay? That I think is going to cause the first mass exodus of liquidity from blockchain systems, which goes back to my original point earlier, not just with Bitcoin, but with all blockchain networks. And I've publicly said this. I think having a strong quantum roadmap, okay, and demonstrating like measurable steps towards post-quantum resistance or post-quantum cryptography will be the most bullish indicator of price. It'll be the biggest driver of price, in my opinion. Maybe not today, but very soon, because if you imagine Solana, for example, getting there before Ethereum, well, then all the smart capital allocators are going to just move their stablecoins to Solana, right? So, and this is what I've said before, I think for these blockchain networks, post-quantum is the most important strategic priority for this reason, because when that time comes, that's where the liquidity is going to go. And if none of them are ready, all the liquidity is just going to go into post-quantum bank accounts parked at the Fed. Okay? So now here's the other way to think about it. And this will, I think, illustrate the point. Let's say our crypto ecosystem is worth $3 trillion for the sake of argument, everything in aggregate, all the market caps added up. And let's say you assign a 1% chance that the IonQ roadmap of 2028, 2,500 logical qubits is accurate. And if you assume, if that's the case, and somebody breaks elliptic curve cryptography and everyone finds out about it, that total loss is going to be close to 100%, okay, then we should be, you do the math, 3 trillion times 1% times 100%, we should be spending 30 billion a year right now, rationally, okay, on, post-quantum, like, migration efforts. We currently spend fuck all, excuse my language, like, basically nothing in the blockchain ecosystem. Even a guy like Hunter Beast, I would expect to see the entire institutional blockchain ecosystem supporting people like him and others in this effort. But that's not happening right now. So, and really when you look at a lot of these, so there's a guy named Antonio, he's the lead post-quantum researcher at Ethereum, wonderful guy, absolutely incredible. First of all, he's a great human being, he's very smart. He just did a talk at SCC in Cannes, and I was there. I was there with a friend of mine, Melody, and he outlined all the different trade-offs, and he said this is a hard problem. And it's just him right now. I mean, I understand they're talking about this, but we need to think about this. Let's say from an Ethereum standpoint, like we need like an AWS level engineering team dedicated to this with tremendous resources where this is a priority. So does Solana. Solana, as far as I understand, is right now focused on BLS. BLS is a way of aggregating signature schemes, which would make Solana even more performant, which makes sense because right now their meme is kind of the capital markets and so on. But you look at a guy like Matt Sorg, he's a VP of technology at Solana, great guy, very smart guy. I'm just saying, if you go in the BLS direction, I think in a couple of years you have to change the plumbing and you have to restart. So if these timelines continue to accelerate, and it doesn't even need to be that, it just needs to be that people believe them and start to remove liquidity from stable coins, for example, in the first instance, it's going to have a pretty devastating impact. So that's kind of how I think about this stuff. You also look at, for example, Tron. Tron has a huge amount of USDT. Yeah. And I don't mean to denigrate anyone. I've met Justin a couple times. He was always very polite to me. But like, I have not seen anything from Tron as far as any kind of focus on this area. Likewise, I also wrote another article talking about what I call the institutional force function. So this is another element that I think very soon will become critical. So you look at BlackRock, okay, and BlackRock recently, and it kind of made a little bit of news, updated their post-quantum or their quantum risk disclosures for their Bitcoin ETF products and Ethereum ETF products and so on. I tweeted at them in December and I sent them an email because I own some of their products. I don't know if that had anything to do with it or not. I like to think it did, but probably not. But their previous risk disclosure was like very small little blurb, you know, and you read the fine print on those big documents, right? Now it's much more substantial, okay? So you look at Saylor as an example, whom I have a tremendous amount of respect for, but I think he has basically not articulated the risk, okay? And so I believe very soon Strategy will also be forced to update its post-quantum risk disclosure or quantum risk disclosure in line with what BlackRock has done. And in fact, even BlackRock's risk disclosure, I think, will get much more in depth. So you look at Circle, and I was kind of talking about this with the Circle IPO and Jeremy Allaire, another great guy. Circle doesn't have any risk disclosure around this stuff.
Really? Yeah, we had Jeremy on the show a few years ago, you know, and they just had a massive, you know, 6x, 10x oversubscribed IPO. Amazing, yeah. But there's nothing in there?
As far as I know, as of today, I mean, I didn't check today, but as of like, I don't know, I probably checked a week or two ago, there was nothing. And yeah, now there's a fiduciary responsibility because they're public. Yeah. That's also one of the changes, right? And so then you go down the line and you look at regulators. So I'm very fond of ADGM, Abu Dhabi Global Markets. I think they're one of the smartest in the world. And Abu Dhabi is going in a direction where, I mean, it's the new global finance. It's like the new Switzerland, you know. And everyone goes there and gets along. The entire crypto ecosystem is basically in the UAE. A big part of that was a guy named Ali Al-Nuami, who's a brilliant guy. He's a nuclear engineer. You know, during COVID, for example, their borders shut as well, closed as well, and they've got nuclear power. And so they actually had too much power in the grid. So they needed off-takers of power. And he's one of the guys that architected bringing in all the mining to off-take power, which I think in the context of proof-of-work blockchains, ancillary services to the grid is the use case. It's tremendously important because if you have to shut down nuclear power plants, it's very expensive. Those turbines are designed to spin for 20 years. They shouldn't stop because you get micro abrasions. Suddenly that thing, you know, becomes very expensive to maintain and fix. And likewise, if you have too much power in the grid, substations start blowing up and so on, right? So you need off-takers. And that's when, you know, the Bitcoin mining infrastructure came in. And of course, the rest of the blockchain infrastructure. And so you look at a guy like Dr. Marwan, for example, who's a pioneer there. He's a guy I've known since 2016, brilliant guy as well. And he brought in, you know, the blockchain center and all the different companies and so on. The whole ecosystem's there. Okay, so then they innovate. Now the VARA license, you know, that full license is like the coveted license. I think the regulator in the UAE, whether it's ADGM or whoever, is going to start mandating soon, maybe not this year, maybe not next year, but as this risk becomes clear, to the exchanges. If you want your license, then you have to make sure that the coins you list at least have, you know, some standard, right? Like a roadmap, they're beginning in this direction and so on. I think that's going to be another institutional force function. The exchanges. So the ETF and other institutional financial product, you know, issuers like BlackRock, Fidelity, and so on. The stablecoin issuers in particular, you know, and I admire Paulo very much. And by the way, I think he's right on the MiCA stuff. He hasn't been compliant with MiCA, and his argument is it introduces systemic risk, and I think he's absolutely right.
This is Tether.
Tether.
Yeah.
But nonetheless, and so he doesn't have the same fiduciary because he's not public, but and by the way, it wouldn't surprise me if he moves to America and IPOs on the NASDAQ. But in any case...
They are creating a new stablecoin that's Genius compliant, apparently Tether is.
Yeah. Well, and that's smart, by the way. I think the Genius Act is much better than the MiCA stuff. But in any case, he's a guy that also will have to start looking at this stuff, you know. And so you kind of start putting it all together, and this is the institutional force function. It's the ETFs, it's the public crypto companies, it's the regulators, and it's the stablecoin issuers. They will force function blockchains to move in this direction. Again, it goes back to my thesis that having a strategy around post-quantum is the most bullish thing you can do, frankly. Now, I get their skepticism, and I think, you look at a guy like Martin Shkreli, I think he's a smart guy. He says a lot of smart things. He's very skeptical, and fair enough. And a lot of the points he makes are valid points. First of all, quantum computers, they're very limited in terms of what they can actually do. And certainly for the foreseeable future, that's definitely true. However, even he admits that at some point, they're going to be able to, break public keys by virtue of having access to public keys. Break private keys. So it's a matter of time. Now, even if you're a skeptic, and that's totally fine, there's not really any good argument against blockchains taking this seriously now, because in case the roadmaps are actually accurate, and one of the arguments is, well, you see these startups, these quantum startups, and they have really good incentives to put out flashy headlines that are bullish and indicate that they're moving along quickly because they're raising money, right? And so, and I buy that. I think that's a valid argument. It's one, let's say, salient point where people should be skeptical of these startups for that reason. However, DARPA doesn't do that, right? DARPA is one source of information. NIST is another one, okay? NIST is the US government standards body for, basically cryptography standards, okay? And they release post-quantum cryptography candidates, which then go into the market. And by the way, 2 post-quantum cryptography candidates have already been broken as well. Psych, one of the isogeny approaches. And so and I do think
what the London Real Investment Club actually does for you, it gives you the keys to open that door to the inside deals. In the last 3 weeks, I've participated in 3 incredible deals: a layer 2 Bitcoin protocol, an incredible AI protocol. The deal flow is beyond what I expected. I don't think I've ever seen a model like this that just gives average folks the opportunity to be behind the deals, and that's exactly what we've done. Not only that, you get to hang out with Brian Rose every week. And for me, that was huge because I look at Brian as somebody who's not only an expert in the space, and I think is on the leading edge, but just the leading edge of thought with London Real and the work he's doing there. To anyone who's taking a serious look at this, I know it's a big decision. It was a big decision for me and my family, and it is one of the best decisions I've ever made. So I wish you all the best and hope you come join us.
A lot of the candidates that we're looking at right now, Sphinx and other lattice-based, some of these post-cryptography standards that will become more common name in the future, but they're pretty solid, although you need time to test these things in the real world. And so, even if you're a skeptic around all this stuff, which I think is totally fine, again, if there's a 1% chance that these roadmaps are accurate and we're looking at 100% total loss, that should tell us rationally what we should be spending now, given the size of this ecosystem. Let alone, and I think we're going to see like a major pump in this ecosystem over the next couple of years. I mean, it's just my opinion. It's not financial advice. But what if we become a $30 trillion ecosystem in the next few years?
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.